Rocket candles are always where you least expect them. My name is Andrew, and I want to tell you guys about the secrets of the after hours, why we are seeing data so closely resembling the after hour squeezes of last year in 2021, and why are we now looking at astronomical cost to borrow as well as utilization now stabilizing in the same exact patterns as when we saw the last squeeze. In fact, it's too eerily similar. Finally, you are probably going to have your skin crawl when you take a look at this Charles Payne video. So make sure that you guys stick until the end because I'm going to be playing that right then. Watch this video, hit that like button, and comment out what is your favorite part and which like you guys are in the description down below. First things first, take a look at where we saw utilization go to 100% in the past, right before that January squeeze. So I'm going to take a look at the x-axis here. I'm looking at Ortex. I'm a data scientist here in Silicon Valley. My name is Andrew. That's Professor Meatball, and I am looking at where we are seeing that humongous green candle on GME for the very first time. This is going to be the same thing for AMC in just a second. We are looking at utilization peaking and then plateauing right at that 100 utilization. This is that orange line right here. So now that we take a look at utilization, we now have a better understanding that that took about a 6-month gap somewhere between July and January where it was near 100% utilization the entire time. But guess what has happened since January to now, July? So we are looking very, very closely at the exact same duration of 100% utilization. And if that's not enough, we are now looking at skyrocketing cost to borrow. That's that green line right here. So cost to borrow having a field day, not only on GME, but more prominently, you can take a better look on it on AMC. We are looking at cost to borrow having a plateau here where we are staying underneath the, we were supported by this line here, then went astronomical. Cost to borrow is a measurement of how easy it is to acquire more shares of a stock, especially in the way of shorting the stock or forcing the stock to sell off shares by borrowing shares you don't have, selling them, and then hoping that the share goes down. That's the general short. But if you don't have a share on the other side that you're borrowing, then you, my friend, have counterfeit shorted, which is where the hedge funds find themselves in the middle of a big mess. So that is why we're looking at another day of over 20% short. Remember the Volkswagen squeeze, not comparable, but we are looking at over 15% short of another week of 100 utilization and again skyrocketing cost to borrow. All of this combined, we are taking a look at whether or not we had after hour information the day before the AMC humongo rip. That is something that we were able to track back here when it saw that buy signal from Lux algorithm. Luckily, we were able to have this tool from a year and a half ago. So if you guys don't have your own Lux algorithm yet, it gives you buy and sell tools. It laps right onto the free trading view, and you guys can get 20% off the description Andrew Mo Money in the code. So we had the buy signal that brought AMC up from about $12 all the way up to that $77 range. Now, even TradingView is not showing it, but we are looking at $32 before the pre-market rip. In the pre-market, we saw a $77 peak on the maximum price. That means that if you guys are paying attention to the regular trading day, you're likely going to only see a portion of the actual democratic voting process of whether or not it's going to go up or it's going to go down. To understand where a stock is going, it's good to have the technical trading analysis. For example, we are seeing that AMC has now essentially tried to peak again at a 1673 level of resistance. In fact, we've been tracking all the resistance and supports in the past, and the one that AMC tried to peak yesterday was at a 1481. Luckily, that's also in that overbought Bollinger here in this red cloud, which helps us have better understanding of when we're going to have a bearish turnaround. So that gives us a better understanding of where AMC is heading, and it gives us the buy signals in the macro scale. I'm looking at the hourly chart, and AMC is still on the strong buy signal. Probably for good reason, because at the end of the day, we are looking at the same exact data, infuriating the hedge funds and making it clearer and clearer that we are on the side of history that matters. It's the greatest wealth transfer in history, and you guys are just on the forefront of it. Because at the end of the day, if a lot of these hedge funds start to fail, retirements as well as everybody's livelihoods traditionally are in the balance. And so the people that have been accruing a large nest egg, perhaps off the backs of people who are actually working all day, standing on their feet, making a living, is actually going to reverse. And at the end of the day, that's what this channel is covering. Let's take a look at what the silverback Charles Payne has to say about this quick clip. I'm going to try and keep my commentary to a minimum, but understand that at the end of this video, I'm going to say a couple of things about whether or not there is going to be another after-hour squeeze.
A long-awaited release of that House Financial Service Committee report. Unfortunately, of course, it was knocked out of the news cycle by that Supreme Court Dobbs decision. That sucked all the air out of the room. But I got to tell you, burned retail investors, they saw the report, and I think most of them want more answers. Now, I haven't read the whole thing. I did go through some of the summaries and things, and I'll tell you, retail investors obviously want action and they want fairness. And I say it's enough of the platitudes, even when they're packaged in 138 pages. I mean, the report is titled Gains Stopped: How the Meme Stock Market Event Exposed Troubling Business Practices, Inadequate Risk Management, and a Need for Legislative and Regulatory Reform. It reveals some really troubling business practices, and listen, none of this is new for the retail investors. And here's the thing: you can't make it easy for folks to trade, and then when they trade, say they trade business practices.
I do want to be able to pay attention to the fact that this Robinhood exchange here says the head of data science at Robinhood, PCO, position closing only will trigger a crash. I am certain. Product manager says it's a bad look. Product manager says we're supposed to suppose the retail. Either that's a typo or that's exactly the type of bullheaded, pig-headed, dumb approaches that are happening to the industry as a whole. It's bad. Bad news bears all around.
This is, listen, none of this is new for the retail investors. And here's the thing: you can't make it easy for folks to trade, and then when they trade, say they're trading too much. And this exchange, by the way, still, that I'm going to share with you, makes my skin crawl, particularly if you were using a trading app that you thought was there to help you as a customer, and you found that you weren't the customer. So the head of data over at Robinhood says PCOs, which is position closing only, will trigger a crash, I'm certain. The product manager says it's a bad look. Also, he goes on to say, we're supposed to support the retail investor. Now, I'm not sure where all of this goes from here. I mean,
that is a typo. Okay, well, that's better. But at the end of the day, it is telling. It is telling that people had these conversations right before major catastrophes that cost a lot of people good money. The people at the crime scene have now been caught on tape, covered in this meme stock report, and now you have a better understanding of just how disgusting the world is. However, hopefully we can make transparency the top priority for not only congressmen, we've interviewed congressmen on this channel, not only governors, not only people at the White House level, but people at the voting level should take every single opportunity they can to make their voices heard. Thank you for following me on my financial journey. Thank you for starting yours and starting to invest in yourself. If you guys liked what we had to say today, if you guys found it entertaining, or if you guys want to hit that like button, hit that subscribe button, hit that support button, like that Patreon button or the join button. It helps make the show possible, keeps that sleepy meatball in the corner, and keeps the Andrew Mo Data channel running. Thank you guys, and we'll see you in the money. Peace.